Hi, welcome back to my channel. Today I wanted to talk about FHA loans. A lot of times people will come to me and are confused because there's so many different things out there. There's so many different opinions out there. And you know what? Everybody's situation is really different. And it depends on what your file looks like with a lot of different factors as to what is best for you. So just to kind of explain to you the ins and outs of FHA loan and where it works best and where it doesn't work back, that way you have a little bit of knowledge when you're going into your loan. So what an FHA loan is it's a government-based loan. So the government insures the loan. What that does for you is it allows you to be able to get a loan with lower credit scores, which is a good thing. So a lot of times people that are just starting out in life and they just don't have the credit, like maybe it's a short history of credit or something like that, they'll go for an FHA loan and that works out great for them, and I'll explain why. I am the party. A lot of times if you've had credit blemishes in the past, then an FHA loan might be what's really good for you too. And I'll explain why. A lot of times if you've had some problems with like bankruptcies, foreclosures, FHA works good for you as well. So here's the goods and the bads about FHA too. So that way you kind of have a full understanding, because I feel like there's a give and take with anything that you're going to do. Any program that you're going to do, or really anything in life. So as far as how the FHA works is right now, the guidelines to get somebody into an FHA loan are going to be a 600 FICO score. So you need to have a minimum of a 600 FICO score. The good thing about how FHA works, and some other programs don't work like this, is if you've had some, like maybe a bankruptcy in your past or a foreclosure or a short sale, FHA has a lot more lenient guidelines to help you get into your house with those kind of things on them. So like if you had a bankruptcy in your past, you only have to wait 2 years on an FHA loan. If your bankruptcy included a house in it, so like your house foreclosed within the bankruptcy, then the waiting period is 3 years. That's different than other loan programs like a conventional loan, because on a conventional loan, a foreclosure, you could have to wait maybe up to 7 years for it. So you definitely have a good benefit right there. Also on FHA, they're not so much credit score driven loan programs, meaning that if your credit score is a little bit lower, a lot of times on other programs, you take a lot higher of an interest rate to be able to make up for where your credit is. FHA is not really like that. FHA offers really low rates regardless of where your credit is. So, but like if you have a 640 FICO score compared to someone that has a 720 FICO score, you're going to receive the same rate, which is a really good benefit to an FHA loan. The other thing that it offers, which is pretty awesome, is the down payment requirement for FHA is only 3.5% down, which is a really good down payment. And there's also some grant programs that you can add to that to help like lower that down. So that has a lot of flexibility with grants, more so than you'd see on other loan programs. With the down payment, a lot of times people will come to me and say, well, I don't have 20%, I can't get a house. You don't need 20%. Honestly, very few people buy a house with 20% down. So on an FHA program, you'd have to have a minimum of 3.5% down unless you're adding a grant to it, and then it could be less, even down to 0. But when you're putting on a lot less money, FHA, you're gonna have monthly mortgage insurance. So how FHA works is they break that down in 2 ways. They take a portion of your insurance and they're gonna add it to your loan amount. So it's gonna raise your loan amount a little bit. And then they take the other portion of it and then they add it to your payment. So when you're looking at your payment, you'll have to make sure that you're seeing your principal and interest, your taxes, your insurance, and then your mortgage insurance, and add those all up together. And when you're doing a loan, your loan officer will always provide you with a loan estimate or a fee worksheet that will show that full breakdown. But you're gonna include all of that in your payment to get to the bottom line. Their mortgage insurance isn't bad. Like the amount of it, sometimes depending on the FICO score, it's a lot less than other loan programs. on the mortgage insurance. The only thing that you have to be aware of when you're doing the mortgage insurance for an FHA loan is that it's for the life of the loan. So when you sign on with the FHA loan, you just have to go into it and understand that you're looking at a payment that lasts 30 years on that payment. So meaning that a lot of times you'll hear, well, mortgage insurance will fall off after I have 20% equity. That's the magic number for mortgage insurance. Not necessarily on an FHA loan. On an FHA loan, when you sign the papers, if you're putting a minimum of 3.5% down, then the mortgage insurance is on there for the life of the loan. So that's really the only downfall, I would say, to an FHA loan. But there's good news to that too. Most people don't keep your loans for the full 30 years. Most of the time, you're gonna pay on them and you're gonna see rates, going up and down all the time. So at some point, you're gonna wanna refinance. Once you have 20% equity, you can refinance that FHA loan and you won't have the mortgage insurance anymore once you refinance it onto a conventional loan. So there's a way out of that. You just have to refinance later on down the road. So anyway, I just wanted to kind of give you like the benefits of an FHA loan and the disadvantages of an FHA loan so that you kind of had a good way of looking at things. How I'll look at things is that when somebody comes to me, I'll say, okay, here's what an FHA loan will give you, here's what a conventional loan would give you, and then you just kind of compare the two side by side, because every loan program is really going to have its good and its bads, but it gets you into your house, and a lot of times it can get you in with very minimal down, sometimes even with no money down if you have eligibility to a grant program. An FHA loan is a great way to be able to definitely work that for you, to be able to get you into house with no money down and very, very good interest rates. Like, there's some of the best rates out there when you're looking at FHA loans. Anyway, if you have any questions, feel free to reach out to me. You can comment below. You can call me anytime. Anything that you need, just let me know. I'm here for you. I hope you have a good day.